the Preferential Trade Area Bank, or PTA Bank, has said it will continue to tap into the continent's capital markets and expand its financial networks among member states. It now has its eye on Mauritius, and joining us to explain more about the planned business expansion is PTA Bank President Admasu Tadesse. Admasu, good to have you on the program. You would have come into the studio here in Johannesburg not too long ago, because it was only in 2012 that you moved across the Development Bank of Southern Africa to the PTA region. Just for those of us who haven't been exposed to PTA Bank before, what is the area that you cover?
Well, PTA Bank is a trade and development finance institution covering Eastern and Southern Africa. And in principle, the mandate goes from Cairo all the way to the Cape.
But presumably you don't
at
compete.
This stage, of course, South Africa's...
Sorry, presumably at this...
Well, yes, actually, PTA Bank is a close partner with DBSA, so we work together on many projects, and we have co-funding relations on a number of levels. So, but there's a very strong focus area of PTA Bank, which is trade finance. Part of our mandate, of course, is to promote regional integration and to ensure that there's more and more trade between member states.
So if it's mostly focused on trade finance...
18 member states plus China at the moment.
If you're mostly focused on trade finance, do you also support infrastructural development?
Yes, in fact, infrastructure development is one of the legs of the bank. We have three pillars, if you like: trade finance, infrastructure finance, and enterprise finance.
I also noticed, and perhaps you can give us some more insight, that China is one of the shareholders of the PTA Bank, together with 17 other countries and the Africa Development Bank. It's unusual that a regional organization would allow an outsider to come in. Can you give us some background to that?
Well, it's an interesting story. The region, Eastern and Southern Africa, have typically enjoyed very close relationships with China going back over a decade. The People's Republic of China joined the bank when the bank was still very small and not doing anywhere nearly as well as it is now. Today, of course, the bank is got an authorized capital of $3 billion US. Balance sheet is around $2 billion now. We have our bonds trading in Europe, as well as various capital markets in the country, such as Kenya, Uganda. We've also issued in Tanzania. Mauritius is one of the 17 African countries that owns a share of the bank, and it's a very strong member state. The nature of our institution, of course, is we need to have outreach to all the countries that we cover. So for the Indian Ocean countries, Mauritius is an important hub that we are using more and more. And of course, Mauritius is a very strong country in terms of its financial services platform. Of course, its legal structures, the cost of doing business, the transparency here. Lots of global funds tend to operate out of Mauritius, at least as a domicilium. And so it does inspire confidence on the part of investors.
It would presumably also be a good
idea
idea
of a country.
Sorry,
yes, in fact, we've just recently launched a infrastructure fund, a $1 billion fund, which is in the process of capital raising, and that's going to be domiciled out of Mauritius. And we're also doing a trade finance fund, and that'll also be most likely domiciled out of Mauritius as well. So there's a very strong funds management drive that we'll be running out of Mauritius, and it's a very good country for that. It's one of the best rated countries in the region, as you will know. A single A rating is a very good rating in the context of the region. It's the highest. So it's a good place for us to be domiciled.
This little delay that we have is becoming somewhat problematic from my side, but I'm sure we'll get it right. That $1 billion infrastructure fund that you've just raised, Can you give us some insight into where it might be applied?
Well, it's going to be applied across the member states. And that's typically, again, as I explained earlier on, Eastern and Southern Africa, all the way from Egypt in the north down to Southern Africa. At this stage, of course, South Africa is not in the membership, but at some point we expect South Africa to join as well. And so it will be cross-cutting. Of course, South Africa has very deep capital markets of its own. The sovereign has got a very strong national budget for infrastructure. So a bank like us wouldn't have much impact in South Africa. So we focus more on the rest of the countries in the region where there are big gaps and financial institutions are not very strong or very prevalent, so to speak.
What I'm trying to get at is if you have any infrastructure programs or projects that are earmarked for those that $1 billion.
We do, actually. We have quite a few power projects, transport projects, some telecoms projects, and they cut across the whole region. It's premature for us to say which ones, particularly now. There is a pipeline that's been identified, and many of the projects are cross-border in nature, so they cut across East Africa. They involve countries in Southern Africa. So there's quite a mix of projects. Some of these projects are projects that are priorities within COMESA, SADC, or the East African community. Some of them are even reflected in the Continental Program for Infrastructure Development. So we, together with our partner banks, try to make a push to ensure that African institutions are doing their part as well. So the African Development Bank is a significant shareholder of the bank. And they also are very active, as we know, the single largest infrastructure financier in the continent. And then there's DBSA and IDC. So we work closely with those three institutions. And then, of course, we have all the other international development financiers who support infrastructure in the continent. So as you would know, banks tend to work together as co-financiers, and we are just one of a number. The advantage that we have, of course, is we're multilateral. So we have a treaty very similar to the IFC or the African Development Bank. So countries give us preferred creditor status. We can work very dynamically and seamlessly in the countries in which we work.